Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of November the 26th, 2018. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index that basically dictates a number of our main Forex pairs. Now, when we look at the dollar this week, it's recovered somewhat, but it's not overly strong here. Now, when we look at our triple EMA cross, we've retaken that. Our critical support now becomes 96.50, and it would appear that the path with the least amount of resistance would be to the upside. But as you can see, we've got zones 1, 2, and 3 sitting up at this area, and unless we can make a sustained break of the 98 level, then the dollar is likely, any rally in the dollar is likely going to be short-lived. Now, we've got the FOMC minutes coming this week, I believe on Thursday, and the minutes could actually be somewhat of a dovish set of minutes if some of the Fed members believe that they should back off the rate hikes going forward. So in my respectful opinion, we are likely to get what's called a dovish rate hike in December, where they hike, but they turn around and say any further hikes are going to be data dependent. That would be a dovish hike and very, very dollar negative. Now, we could start to see the signs of this as early as Thursday. Now, the market could reposition itself, so we want to be very careful here. And remember, Monday trading is a fake trading day. In most cases, the market goes the opposite way on Tuesday, Wednesday, Thursday from whatever move it makes on Monday. So keep that in mind. Our neural index on the dollar index is higher, but our MACD is not. So the indicators are quite mixed here. When we look at our VantagePoint long predicted by itself, which I like to do, we've closed just above this blue line, but only one day. We do not have a 2-day close above that particular blue line. So if the dollar comes out of the gate very strong on Monday, it's likely going to sell off Tuesday, Wednesday, and Thursday. But if the dollar is very weak on Monday, we could see dollar strength the rest of the week. So try and keep that in mind. Now, when we look at the equity markets going into next week, believe it or not, we actually do have somewhat of a buy signal here. We've got the medium term crossing the long predicted difference, but our neural index is still down. Now, so to be very clear here, guys, this presentation is an outlook. It's not talking about something that's already happened. We're talking about what's going to happen here. This is a proprietary indicator from VantagePoint that is one of the most powerful divergence indicators I've seen. And it is suggesting that the medium-term trend is starting to turn back to the upside. So when the neural index confirms, we are likely going to see a reversal. So a Santa Claus rally is not off the cards here, or it's not off the table yet, guys. So try and remember that. The main indicators are saying we're still going lower, but that would be normal for Monday trade. If the market does move aggressively lower on Monday, it's Tuesday when the stocks will likely reverse. Now, with oil for next week, oil still, this is an absolute fantastic call from VantagePoint on light sweet crude oil. We've basically, VantagePoint's been forecasting oil to move lower since the beginning of October, and VantagePoint has basically doubled down on that multiple times. So right now, our critical resistance point is all the way up at 59.14. Now, here's my opinion on this, guys, and again, it's just my opinion. The further the market moves away from 59.14, the T-cross long, the critical VantagePoint pivot area, the more likely the market is going right back to that level. Now, on top of all that, we're entering into a very, very powerful verified support zone down here. Now, again, this area, we've closed just a hair below it, but this is in thin illiquid markets on Friday. So watch out with oil next week, guys. We could be getting ready for a reversal. Now, with gold going into next week is going to be a tricky one. It's still predominantly bullish, but here's the thing, guys. This is right now where gold is sitting in the key VantagePoint pivot area at 1227. We closed at 1229, but we are still up against a very formidable 3 verified resistance zones that go all the way up to 112.55. So we've got to be careful buying up here. I do feel that gold's going higher, but it may not be next week. It may not be this month. It may not be in December. So right now, basically, the verified zones tell us where our range is. The lower part of that range is coming in right now at 12.02. We break down below that, we start going lower. The top of the immediate range that we're looking at would come in at or about the 12.44 area. So if the dollar gets into a period of the dollar is a period of known strength, which is usually in the first week of the new month, that's likely to put a bit of pressure on gold next week. Now, that doesn't mean gold's going to reverse lower into a new trend. It just means there'll be downward pressure. Now, this pressure could indirectly put pressure on the euro-US currency pair. When we look at this right now, our T-cross long 113.78, but we're closing relatively close to that at 113.25. Our lower end of our support zone right now is coming in at 12.15. This is a verified support zone. We could come down a little bit lower, but again, the indicators from VantagePoint are very mixed. The MACD is still pointing up, as is the predicted differences. The RSI is down. The neural index is down. When we look at our T-cross long, again, our long predicted, excuse me, we've only closed 1 day below this area. So once again, watch what the euro does on Monday. Watch and wait on Monday, guys. I'll tell you guys here what I tell my own direct clients. Don't jump into the market first thing Monday morning. Okay, let this thing shake out a little bit. If the euro closes very weak on Monday, it's likely going to reverse higher the rest of the week. If it closes very strong, then that's just going to confirm that we are going lower. Okay, but try and keep that in mind, what I've said when applying the indicators. Now, US Swiss franc, we've had a very good short off this area, but now it's starting, we're seeing basically it's getting all tangled up. We've got a new verified support zone that's just formed at 99.09. Longs carry a slight edge here right now for about the next week or so. That's about it here. But you can see that we've got our medium term crossing our long predicted difference with the neural index. When we bring in our short term crossover here, guys, you can see that that's trying to make a signal there. But our T-cross, our long predicted, we are closing above that area at 99.57. We've closed 99.69. So this is an interesting setup. We'll see if it can actually, if there's any legs to this. But right now, we are sitting down in a verified support zone. We're getting all tangled up here. The RSI is starting to rise. It does suggest, if nothing else, this pair is getting ready to correct higher. Now, as we look at the pound dollar for next week, I'm going to say little to nothing on this pair, guys, because it's not being driven by technicals. Our intermarket analysis is being driven by fear-mongering, Brexit, all of these things. So until Brexit passes, the pound is going to be a very, very volatile currency. Right now, there is a loose buy signal right here. We got that basically, actually it wasn't a loose buy signal. It turned out to be actually a pretty decent one off this verified support zone, which is 127.64. You can see where that area formed. We came back and tested it right here. We went higher, and we didn't even test it on Friday. But we did test the T-cross long at 128.91. So we've got resistance at basically around 129. We've got very, very strong support sitting at 127.64. But if the Brexit deal goes south, then this pair's going with it. It's going to drop like a wet bag of cement. So be very, very cautious with I would strongly advise to just until the Brexit matter is settled, or at least there's until we have a deal that's tabled, just stay clear of this one. That's what I suggest. Now with dollar yen, a buy signal is slowly, very slowly trying to form here, but it can't get above the critical VantagePoint T-cross pivot, 113.16. Now we've got our medium term crossing our long predicted difference, suggesting that this could go higher, but as you can see, the MACD is not in agreement. The predicted MACD and the predicted RSI are not in agreement here, so a very mixed bag, to say the least. Now our long predicted, which is our critical daily pivot that we use for not just a pivot area, but for entry, exit, take profit, a number of different things, 113.05. So if we've closed 112.94, Monday and Tuesday are a make or break day for this pair. We're either going higher or we're not. We're a little bit closer to the verified support zone. That's coming in at 112.30. Our verified resistance zone is coming in currently at 114.20. So a slight bias tip to the upside if this current signal starts to develop, but the FOMC minutes could make a dramatic change in the direction of this pair if we get a dovish minutes from the Fed. So be careful again on Thursday around that. Now, with the US CAD, it's surprisingly has not been able to come back up and test the verified resistance zone. That area now is coming in at 133.17. We've set that basically last Monday. The market came up, kissed it, and then went back down. So, we had some panic. People running for the exit to get out of the short trade. But if you know your levels, guys, you can hold your position and say, you know what, nothing has changed. That's how powerful these verified resistance and support zones are, because they warn us that it's not just a free run to the upside or a free run to the downside. Right now, the downside, our downside pivot area on our support zone, that's coming in at about at or about the 131.46 area, but you can really see the market moving off of the VantagePoint triple cross, our T cross long, 131.74. As long as it holds and oil is significantly down, then there may be a long trade there, guys. But oil looks, as I've said, oil looks like it's getting ready to, if nothing else, to correct back towards that 59 area. And if that's the case, that will put added downward pressure on this particular pair. Once again, our indicators are very mixed to start the week on this. But again, once we put in that, we had this big, and I'll point out here again, guys, this great big move on US Canada, it didn't come on Monday. It came on Tuesday, right, of last week. The same thing. We move lower, then it the market does a quick little stop loss hunt, knocks everybody out, and then proceeds to go lower for the rest of the week. So expect more of the same from this pair this week. Whatever it does on Monday, whether it makes a big move up or down, it'll likely do the opposite on Tuesday, Wednesday, and Thursday. That's a little trick for you guys, but it's an effective one, okay? Now, with Aussie US and New Zealand US going into next week's trade, the Aussie and the New Zealand currency across their counterparts, Aussie against the Swiss franc, the pound, the yen, the Aussie has been one of the strongest currencies in the Forex market, only second to New Zealand, believe it or not. So we're coming on this move lower in the Aussie currency and the New Zealand currency appear to be corrective in nature. If the gold continues to extend higher, if equities recover and oil recovers, Aussie US and New Zealand US will both turn around. So be careful of that. Right now, it looks like we've got a little bit more downside. So we would look for that downside to be relevant on Monday and then reverse on Tuesday, Wednesday, Thursday. New Zealand, we're seeing the same thing. We're correcting off this major move it's made, you can see. And again, it's not Greg Furman saying that Aussie and New Zealand were two of the strongest currencies in the month of November. It's the market saying that. I'm simply highlighting that in case most traders didn't see it, because they're focused on one Aussie US pair and not all of the Aussie pairs combined. So when we look at this, again, a big move on these pairs. So this appears for now to be corrective. We'll see how it starts, but again, we are absolutely going to have a choppy week ahead of us, but there should be some very good opportunities. So with that said, this is the Forex Weekly Outlook for the week of November the 26th, 2008.